Colleagues, it's 9 p.m. Sabata. I'm doing a recording on valuing Salesforce, doing a fundamental quick analysis on Salesforce CRM. I compiled all the information I usually need to do my evaluation, but I'm not going to do it and share it online. Reason being, it's not very helpful because there is so much subjective. There is so much information which is so subjective. Unlike a simple company like the one which I did previously, United Health Group, they sell medical insurance. They're a company which has been in existence for long and their financials are simple and basic. But with Salesforce, things are a little different. And here's the difference. If you look at Finvi's brief about this company, your takeaways can vary greatly. And I will indulge you a bit. It's a big company. Market cap 231. And here's the funny thing. Return on investment, negative. Not less than cost to capital, but actually negative. So literally, it's losing money. You're investing in a company which you know is losing money. That's how one would interpret that. And in the companies with the market cap above 200, it's only Salesforce and Tesla with the negative ROE. Let me just do the quick screen. These are mega companies, 200 and above. And I'll just go and pick ROI. Here's our return on investment. If I go negative on return on investment, I only get two companies in that ballpark, CRM and Tesla. So it's very rare for such a big company to have a negative return on investment. But let me take you through. This video is going to be very brief because I'm not going to do a detailed one. Look at the PE. Any fundamental, any value investor will tell you this is more than crazy. A PE, usually when you are a value investor, you like it around 20 and less. Look at the PEG. The PEG, I deal with a PEG of 1 up to 1.5 and below. Preferable 1, but mostly I'll be comfortable with a PEG ratio of 1.5. But this is a 39. And it's almost the only company with a PEG ratio that crazy. Into the companies which I check, I'll take the large companies over 10 billion, and we'll just go and pick the PEG ratio. Where's my PEG? There we are. PEG. Let me go with all the PEGs. Yeah, I'll go with all the PEGs. I'll just filter them later. There we are. More than enough data to go with. Let me just do this. And I'm going to go to valuation. Here's our valuation. Here's the PE. Here's the PEG. I'll just pick the highest PE. There we are. Have some companies with the high PE. And the PEG. It's getting too busy. Let me. Oops. Okay. I wanted them bigger companies, but my filter is not working nicely. I had too many things left unfiltered. Okay, I'll go with the negative. Yeah, we're down to 4, that's better. And there we are, and I'm sorting with the PEG. You can see there's this company called Dodge, but it's too, I haven't investigated it, but it's got a blank PEG. CRM comes in as the first company with a PEG ratio and a crazy PE. All the others are smaller, are small, but yeah, in this first page, there we are. This is not the best filter, but most companies, you'll notice that their PEG ratio is below 10. Okay, let me filter by PEG ratio. That will help. Look, filtering by PEG ratio, CRM is at 39. The closest next company is CTV at 10, and everything else is below 10. So between 10 and the first one being 39, we only have CRM. So the numbers for CRM are way crazy. And they're not crazy by mistake, it's intentional. So what I'm trying to bring across here is this. Before you evaluate the company with just information you are given from a screener, know the type of company, know what their target is, who is their target client. CRM doesn't care about all these numbers which I've been looking at. They don't have debt. They don't pay out a dividend, nothing. They are all about one thing, about increasing sales and price. That's all. The return on asset, return on equity, return on investment, they don't care. This thing can be negative for all they care. So if you are going to invest or evaluate a company like this, understand who their target market is. Their target market is people who are interested in price appreciation. And this number is cooked. What I mean is most companies will try to increase their return on equity if they want to attract those investors, value investors who want return on equity, and try to make sure that their return on investment is higher than the cost of equity so that institutional investors come on board. Not CRM. It's not interested in that. In fact, they have reverse engineered everything. They have made this so credibly useless. They use all their money to an extent that they never really make a significant profit in any year. So there are guys who cook their financials to appear as if they are performing well using these ratios here. CRM does the opposite. They make sure that they show as little profit as possible. That's how they end up with this negative ROE, but the company is performing so greatly. So technically, when you are looking at fundamentals, please do your own fundamentals. These screens at times don't work, like with the case of CRM. You look at it as a shock of a company and ask yourself, why would somebody invest in a company which is losing money? It's not actually losing money. Let me just quickly, in closing, I'll pull you the CRM 2010K. This is their 2010K, 2020 10K, the annual report for the year ended January 31st. I want to pull the income statement to show you what I'm talking about. The net income, which they reported for this past financial year, was 126 million. Then it was just 1 billion and 360 million. That's all they reported. The revenues were 17 billion. They're making a profit of 126 million. Where did the money go to? Gross profit looks great. The revenue is 17, gross profit is 12. This is adding up. Revenue 13, gross profit about 10. Revenue 10, gross profit about 8. So up to gross profit, no problem. After that, there are these two line items which management have control over: research and development, marketing and sales. Start looking at this. They put enough research and development and marketing sales to make sure that as much of the gross profit goes away into those, it's sunk into those two expenses, and nothing goes to the receiver as paying tax. If I total for the past year, research and development, marketing and sales, accounted for almost 11 million. The gross profit was 12. 11 million was taken by those optional expenses. The previous year, optional expenses took 8 million of the 9.8 million. So that's where the money is going. That's why I said they are interested in increasing sales and price. All this research and development, marketing and sales goes to improve their sales, not to pay any taxes or show off a significant net income. That's why you get return on investment so poor. Operating margin 0.3%. So insignificant. They are not interested in showing a profit. They use all the money they make to increase sales and research and development. And the other chunk they will use to buy new companies. On that one, let me go to the balance sheet. If you analyze their balance sheet, you'll notice that the biggest asset which they have is goodwill. There we go. Current assets, it's 15. B. Then goodwill is 25 billion. Of the total assets of 55, more than half is goodwill. Nothing else. Because goodwill is made of these two. That's why I'm saying more than half. 29, almost 30 billion is goodwill. And that's where they use most of their money to acquire some assets or put it into research, development, and sales. So the screener won't tell you the full story. And these guys are not interested in showing you good returns there, showing you profit. They're just interested in revenue growth. That's all. So I'm just putting this across to show you that there is a financial engineering to show good numbers and financial engineering to show very bad numbers, depending on what the company actually wants to do. Yep, I'll leave it at that. Just some nuggets which I wanted to drop with you guys there on a company like Salesforce, where the financial engineering is deliberately done to show poor numbers. I thank you. It's 2 PM Sabata. Bye-bye.